We are officially at red alert. Stop looking at the 5-minute charts. Stop looking at the RSI. Stop looking at the noise. What is happening today, January 6th, 2026, is not a market correction. It is not a healthy pullback. It is not a trading opportunity. It is a war. And today we have received the first official confirmation that the western front of this war is collapsing. Ladies and gentlemen, Asian guy here known as John A.G. For years, we have been the resistance. We have been the ones shouting into the void, telling the world that the price of silver was a lie, that the vaults were empty, and that the banks were naked short. They laughed at us. They called us conspiracy theorists. They told us that silver was a pet rock, and that we should just buy tech stocks and be quiet. But today, the laughter stopped. Today, the enemy didn't just blink. They surrendered. We need to talk about Bank of America. We are not talking about a small regional bank. We're not talking about a YouTube blogger. We are talking about one of the largest, most powerful, and historically most bearish financial institutions on the planet. This is the bank that has consistently shorted precious metals. This is the bank that has told its clients for a decade to avoid gold and silver like the plague. This is the Death Star of the market. And this morning, the Death Star lowered its shields and admitted defeat. Bank of America has officially capitulated. Let's look at the numbers they just put in black and white. While the Western media is distracted by interest rate fractions and unemployment decimals, Beijing has just initiated the single largest monetary event in human history. We are not talking about a stimulus package. We're not talking about an infrastructure bill. We are talking about a liquidity injection so massive that it distorts the very fabric of the global economy. The numbers coming out of China this week are terrifying if you are holding dollars, but they are absolutely exhilarating if you are holding silver. Reports confirm that China has expanded its M2 money supply by 48 trillion. 48 trillion. To give you some context, that is roughly double the entire M2 money supply of the United States of America. Think about the inflation we saw in the US after they printed just 5 or 6 trillion during the pandemic. We saw prices skyrocket. We saw housing explode. We saw the cost of living double. Now imagine a monetary bomb nearly 10 times that size detonating in the Asian market. But here's the critical difference. Here's why this time is different. When the US prints money, it goes into the stock market. It goes into Apple. It goes into Nvidia. It goes into financial derivatives to prop up the banks. The Chinese aren't doing that. They are not printing $48 trillion to save their real estate developers or to pump the Shanghai Stock Index. They are printing that money with a singular strategic purpose: to convert worthless paper currency into hard assets before the system collapses. They are executing the largest wealth transfer in history. They are taking these newly printed yuan and they are deploying them like weaponized capital into the global commodity markets. They are buying oil, they are buying copper, they are buying pork. But most aggressively, they're buying gold and silver. They are essentially saying to the world, we will give you this paper that we just printed out of thin air, and you will give us your physical metal that took billions of years to form and millions of dollars to mine. And the West, in its stupidity, is taking the deal. The West is selling its gold and silver to China in exchange for fiat currency that is being debased at a rate of 48 trillion a cycle. This is the black hole effect we have warned you about. China has become a gravity well for precious metals. This huge injection of liquidity means there is now an unlimited bid in the East. If the price of silver rises to $85, China will buy it. If it rises to $90, China will buy it. They don't care about the price in yuan because they can print infinite yuan. They care about the ounces. They know that whoever ends up with the most ounces when the music stops is the one who gets to write the rules of the new monetary order. So they are sweeping the shelves. They are draining the London vaults. They're draining the Swiss refineries. They are draining the COMEX. And this explains why the premiums are exploding. You see, usually when a government prints this much money, their currency collapses. But the yuan isn't collapsing against the dollar yet. Why? Because they are backing it with the commodities they are buying. They are turning the yuan into a resource-backed currency in real time, while the dollar remains backed by nothing but debt and F-35 fighter jets. This $48 trillion wall of money is the force that broke the back of the short sellers. Bank of America saw this M2 number. They ran the simulations. They realized that no amount of paper shorting in New York can stop a $48 trillion buying spree from Beijing. If JP Morgan sells 1 billion ounces of paper to suppress the price, China will just print enough yuan to buy all the physical metal that those paper contracts represent. The shorts are bringing a knife to a nuclear gunfight. This is why the paper price is becoming irrelevant. The spot price you see on your screen is determined by Western trading hours, but the physical flow is determined by Eastern buying power. And right now, the East has 48 trillion reasons why they are going to win this tug of war. Every time the price dips, that Chinese liquidity steps in and buys the dip. They are creating a floor that gets higher every single day. They're not trading for a profit in dollars. They're trading for survival. They know that the US dollar system is ending. They know that the debt spiral is a mathematical certainty. So they are exiting the burning building first, and they are taking all the valuables with them. And this creates a collision course of epic proportions. You have the unstoppable force of Chinese demand fueled by the largest money printing operation in human history. And standing in the way of that force is the immovable object of Western bank manipulation. But there is a problem with the immovable object. It is hollow. It is built on lies, leverage, and empty vaults. We need to talk about the specific position that the Western banks are stuck in. We need to look at the other side of this trade, because while China is long everything, the banks are short everything. And the size of their short position is not just dangerous, it is mathematically impossible to cover. Let's look at the death trap. Let's look at the 4.4 billion ounces that are about to blow up the world. Now, we must look at the glass jaw of the Western banking cartel. We have to look at the specific number that is keeping the risk managers at Citi and JP Morgan awake at night, sweating through their sheets. That number is 4.4 billion. According to the latest analysis of the Bank Participation Report and the derivative books of the major swap dealers, the combined net short position of the Western banking system in silver is estimated to be 4.4 billion ounces. Now, big numbers often get lost in the noise. We hear billions and trillions every day. So let's contextualize what 4.4 billion ounces actually means in the real world. The entire planet Earth, every mine in Mexico, every mine in Peru, every mine in Poland and Russia, combined digs up approximately 800 million ounces of silver per year. That is the limit. That is the hard cap. You cannot print more ore. You cannot speed up geology. 800 million ounces. That is all we have. So do the division. 4.4 billion divided by 800 million. It is roughly 5.5. The banks have sold on paper 5.5 times the entire annual production of the human race. They are short 550% of the global supply. Think about the insanity of that position. In the stock market, if a hedge fund is short 20% of a company's float, we call it a crowded trade. If they are short 100%, like they were in GameStop, we call it the mother of all short squeezes. But here in silver, they are short 550%. It is a level of leverage and recklessness that has no parallel in financial history. And here's the trap. They sold this silver years ago. They sold it at $20. They sold it at $25. They sold it promising to deliver metal that they do not have, believing that they could always crash the price to buy it back cheaper. But they didn't count on the Chinese liquidity pump. They didn't count on the solar chokehold. And now, with the price ripping through $80, they are underwater by an astronomical amount. Every single dollar that silver rises costs them $4.4 billion in mark-to-market losses. If silver goes to the Bank of America, target of $39, the losses aren't just painful, they are terminal. They are extinction-level events, but the money isn't even the biggest problem. The biggest problem is the physicality. A short position is, by definition, a promise to deliver. When you're short, you owe someone metal. In the past, the banks could always settle these debts in cash. They would say, hey, we don't have the silver, but here's a check for the profit. And the speculators would take the check. But today, the counterparty isn't a speculator. The counterparty is China. The counterparty is the solar industry. The counterparty is the Pentagon. These entities do not want cash. They cannot build a solar panel with a check. They cannot build a missile with a wire transfer. They demand the physical bar. And when they stand for delivery on 4.4 billion ounces, and the vault only has 300 million ounces inside, what happens? The system breaks. It hits a brick wall at 1,000 dominated per lyric. This is the margin call from hell. It forces the banks into the open market to become buyers. Imagine the panic. The same entities that have suppressed the price for 20 years are suddenly forced to switch sides. They have to scramble to buy back 4.4 billion ounces to cover their naked shorts. But who is going to sell it to them? Are you going to sell it to them? Is China going to sell it to them? No, we are holding. China is buying. So the banks will be bidding against a vacuum. They will bid 85, no sellers. They will bid 90, no sellers. They will bid 100, still no sellers. This is how you get a vertical price move. This is how you get a gap up that leaves gaps on the chart where no trades even occurred. This is how you get to $39, not in 10 years, but in 10 days. It is a mathematical inevitability. You have a fixed supply of 800 million ounces. You have a demand shock from China of 48 trillion, and you have a short covering panic of 4.4 billion ounces. There is simply not enough metal in the crust of the earth to bail out these banks. They have sold the wind, and now they are reaping the whirlwind. And this leads us to the most dangerous deception happening right now. Because the banks know they are trapped. They know the math better than I do. So what is their strategy? How do they survive this? They have only one play left. They have to trick you into giving them your silver. They have to create a fake price on the screen that looks high enough to tempt you to sell, but is actually a massive discount to reality. They want you to look at $80 and think, wow, I'm rich, I should cash out. Do not fall for it. We need to talk about the $80 trap. We need to expose the difference between the number on your monitor and the real value of the metal in your hand. Because today, right now, the market has split in two. Let's look at the paper versus physical disconnect. Let's look at why $80 is trash paper. If you don't understand the difference between the number on your computer screen and the reality in the street, you're going to get slaughtered. You're going to fall for the oldest trick in the book. We need to talk about the $80 trap. Right now, you're looking at your trading app. You're seeing silver rallying. You're seeing green candles. You're seeing the price hit $80 an ounce. And I see the comments. I see the celebration. People are high-fiving each other. People are saying, we made it. We are rich. Stop it. Stop celebrating. Because what you're looking at is not the value of silver. What you're looking at is the price of a paper promise on the COMEX Futures Exchange. And I am here to tell you with absolute certainty that $80 for a physical ounce of silver is trash paper. It is a lie. It is manipulation. And it is a trap designed to steal your metal before the real move begins. Here is the reality test. Do not trust the chart. Trust the market. Pick up your phone right now. Call your local bullion dealer. Call the big online retailers. Ask them to sell you a 1OZ American Silver Eagle for $80. Ask them to sell you a 10 O's bar for $80 an ounce. Do you know what they will tell you? They will laugh at you. They will tell you, I'm sorry, but we have no inventory at that price. They will tell you that the real price, the price to actually hold the metal in your hand, is $90. It is $95. In some places, for premium coins, it is already over $100. This is the decoupling. This is the moment where the paper market and the physical market snap apart. The banks are using high-frequency trading algorithms to keep the paper price pinned at $80 because that is where they can manage their losses. They want you to look at $80 and think it is a great selling opportunity. They want you to dump your physical stack back into the system so they can scoop it up and cover their 4.4 billion ounce short position. They are fishing for liquidity. They are dangling a worm in front of you, hoping you will bite. But if you sell your physical silver today at $80, you are selling a winning lottery ticket for the price of a ham sandwich. You are giving away the only asset that protects you from the $48 trillion inflation tsunami coming out of China. Think about the premiums. In a normal healthy market, the premium, the extra cost above spot price, is usually small, maybe $2, maybe $3. But today, we are seeing premiums of $10, $15, even $20 over spot. What does that tell you? It tells you that the spot price is fake. It tells you that the spot price is broken. If the spot price was real, arbitrage traders would buy paper contracts, take delivery, and sell the metal to dealers to close the gap. The fact that they can't do that, the fact that the gap is staying wide, proves that the COMEX is not delivering metal. It proves that the paper contract is defective. It is like a check that bounces. The paper says $80, but the bank says insufficient funds. So why is Bank of America talking about $39? Because they know that eventually this paper charade has to end. They know that eventually the paper market will shut down or cash settles, and the only price will be the physical price. And when that happens, the price won't slowly drift from $80 to $100. It will re-rate overnight. It will gap up to $150 in a single trading session. This is what happened in the nickel market. This is what happened in the palladium market. When the physical shortage becomes acute, the price becomes vertical. So my warning to you is this. Do not let the green candles on the screen fool you into thinking the squeeze is over. The squeeze hasn't even started. What we are seeing now is just the pre-game show. We are seeing the banks trying to shake out the weak hands one last time. They are hoping that you are desperate enough or bored enough to sell at $80, but you have to have the mindset of a central bank. Does China sell when the price goes up? No, they buy more. Does the Pentagon sell when the price goes up? No, they build smelters to hoard more. So why would you sell? You are holding the collateral of the New World Order. You're holding the battery of the green energy revolution. You are holding the only form of money that has no counterparty risk. And right now, the most powerful institutions in the world, from the People's Bank of China to Bank of America, are fighting a war to get that metal away from you. The $80 trap is their weapon. Do not walk into it. Do not exchange your real wealth for their fake currency, because if you sell now, you will never get back in. You will look back at this day, January 6th, 2026, and you will realize it was the last chance to buy silver under 3 digits. You'll realize that $80 was the sale of the century. So, we have the capitulation, we have the shortage, we have the fake price. What is the final verdict? What is the actionable advice for the investor standing in the middle of this battlefield? We need to wrap this up with the conclusion. We need to give the marching orders for the rest of 2026. Let's finish this. Let's talk about the final countdown. Even if the banks wanted to cover their 4.4 billion ounce short position, even if they printed infinite money to buy the metal, they have run into a problem that no amount of financial engineering can solve. They have run into the supply cliff. In that same report where Bank of America raised their target to $39, they quietly admitted the most terrifying statistic of all. They admitted that global silver mine production is expected to fall by 2% this year. Now, 2% might sound like a small number to you, but in the world of commodities, a 2% contraction in supply during a 20% explosion in demand is not a deficit. It is a famine. It means the shelves are getting emptier every single day. And here's the secret that the mining industry knows, but the Wall Street analysts are just figuring out. Price does not create supply. This is the inelasticity trap. The bankers think that if the price of silver goes to $100, the miners will just turn a dial and produce more silver. They think it is like a factory. If you need more iPhones, you just run the assembly line for an extra shift. But a mine is not a factory. You cannot just turn up a mine. If silver hits $100 tomorrow, do you know how much extra silver will come out of the ground next week? 0. It takes 10 years to find, permit, build, and operationalize a new silver mine. 10 years. This is why Bank of America surrendered. They looked at the charts, they looked at the vaults, and then they looked at the mines, and they realized that there is no cavalry coming over the hill. There's no flood of new supply coming to save their short positions. The hole is real, the hole is deep, and the hole is getting wider. They realize that they are short 4 billion ounces of a metal that is becoming harder to find than gold. So they did the only rational thing left. They switched sides. They decided to stop fighting the geology and start riding the rocket. And this brings us to the moment of truth for you, the individual investor. We have laid out the entire battlefield. You see the capitulation of the banks. You see the liquidity bomb from China. You see the short squeeze math. You see the fake price trap. And now you see the geological cliff. Every single indicator, technical, fundamental, and geopolitical, is pointing in the exact same direction. Up, and not just up like a stock chart. Up like a revaluation of reality. The time for analysis is over. The time for hesitation is over. We are now in the execution phase. The window to act is closing, not by the day, but by the hour. As we speak, the Asian markets are opening again. The premiums are ticking up. The inventory is disappearing. So, what is the final message? What is the go order for the army of silver stackers watching this video? We need to crystallize this into a single undeniable call to action. We need to end this report with the only words that matter right now. Let's go to the conclusion. Let's finish this war. We have spent the last few minutes dissecting the anatomy of a financial collapse. We have looked at the surrender of Bank of America, the monetary flood from China, the impossible math of the short positions, and the hard reality of the geological cliff. But all the data in the world is useless if you do not have the courage to act on it. The time for debate is over. The time for watching the market is over. The crash is here. And when I say crash, I do not mean the price of silver is going to crash. I mean the system is crashing. The mechanism that has allowed Wall Street to control the price of your labor and your savings for 50 years has finally snapped. The spread we are seeing today, the gap between the $80 paper price and the $100 physical reality, is not just an arbitrage opportunity. It is the death rattle of the fiat currency regime. It is the sound of the dam breaking. And when a dam breaks, the water does not trickle out. It explodes. You have to understand the psychology of what happens next. When those banks finally get the margin call from hell, when they are forced to cover those 4.4 billion ounces, the price will not go up by 10%. It will not go up by 20%. It will go vertical. We are talking about a move of 100% overnight. We are talking about waking up tomorrow morning and seeing silver trading at $150 and then $200 by lunch. This is what happens when a 500-year-old asset is repriced to reflect $48 trillion of new money. It is a melt-up. And in a melt-up, the person holding the paper gets wiped out and the person holding the metal becomes the new bank. So this is my final instruction to you. This is the go order for the resistance. Do not sell. I don't care if the screen says $85. I don't care if it says $90. Do not trade your sovereign wealth for their dying promises. Do not let them trick you into bailing them out. They are drowning and they are begging you for a life vest. Do not give it to them. Let them drown in their own liquidity. Instead, if you can still find metal, if you can find a dealer who hasn't realized what is happening yet, or a neighbor who is asleep at the wheel, buy it. Buy the premium. Buy the scrap. Buy the junk silver. Clear the shelves because the window is closing. We are entering a period where silver will simply become unobtainium. Yet you won't ask what is the price. You will ask, is there any left? And the answer will be no. Bank of America has given you the target, $39. China has given you the catalyst, $48 trillion. The geology has given you the guarantee, production collapse. The universe is screaming at you to hold the line. We have won the argument. Now we must win the war. The Western Front has collapsed. The enemy has capitulated. The road to triple digits is wide open. Do not waver. Do not blink. This is the moment we prepared for. This is the transfer of wealth. This is John Agg. The alert is red. The target is locked. Go, go, go.